Hey everyone, looks like we're gonna have a small group today, but I do really appreciate everybody joining. So Logan and I are going to just go through what we do at Calvert and how we can help you close more deals with borrowers. So I'm going to just share a screen. We'll get started. Please stop at any point along the stop us, ask questions, you can even ask us questions about a specific deal or anything like that. We're totally open to go through things and give you the answers as we go. So I will share now and we'll go from there. Just bear with me here. Is everybody seeing my screen right now? We're good? Okay, excellent. So again, welcome. My name is Sherwin Dziwenka. I'm with Calvert Home Mortgage. Together with Logan, we're going to go through our products that we offer in Ontario. Again, we want this to be as interactive as possible. So do ask us questions, even if you have examples of maybe something we've done with you or maybe something you're looking at. Again, ask those questions. So we'll get right into it. Oh, and a couple ways you can post a question via the chat, or you can just ask directly, just unmute yourself and ask directly here. So about Calvert, Calvert's been in business since 1975. We were a mortgage brokerage to start off, and then we turned into a MIC in 1982. As you can see by the map kind of indicates the two provinces we lend in Alberta and in Ontario. So as a broker in Ontario, if you have deals in Alberta and you're registered appropriately in Alberta, we can look at a deal for you there. Or if you can co-broker a deal as well. So there's different ways of us looking at deals in Alberta, but what we're going to do is focus on the Ontario lending strategies and what we focus on there, and then and go through that thing. So in 2022, we lent out $336 million on 859 different loans. This year, we're on pace to do something similar. And most of those, again, it's all short-term lending in Ontario. Lots of flips and BRRRs, and Logan's going to go through that great product that we have. We do, again, focus on that short-term lending with strong exit strategies, so that sell at the end or that refi at the end, something that we can see, yes, there's that defined short-term exit that's real. It's right there. At Calvert, our mission is to be trusted advisors, offering us an effortless experience for the personal and financial success of others. So Calvert is a private lender. We do a lot of things that most private lenders do, but there are a few things that we do quite differently. One of the things that we do really well is we respond very quickly, especially on time-sensitive deals. We can run through and fund very quickly. So we always, again, if you have a rush deal, we can fund. It says 48 hours from complete deal submission. I know we've done it in less time. If needed, we try to request at least 48 hours or more, just to make sure that everything's dealt with. But with complete document submission, like if we have the full package, we can rattle through things really quickly and get you an answer, whatever way it is, or give you an option at least. One of the reasons why we do things quickly is because we do internal valuations. So this eliminates the delay to get an appraisal done, and as well as the costs to get an appraisal done. So making it a little bit cheaper and faster to get us to an answer, a real answer of what we can lend dollar-wise on the mortgage. The caveat to our internal valuations is if the property is worth 1.5 million or more, we do require a third-party appraisal. The other type is when it's a commercial or a multifamily type of property, residential type of property, we would require third-party appraisals on that. A little further down, no voicemail, really important for us to be able to answer your call and give you, be able to talk to somebody directly. So we talk about no voicemail. Really, that all that means is you're going to call into our office, ask for me. They're going to patch you through. If I'm on another call or in a meeting or something like that, it's going to go back to the front desk and they're going to ask if they can give you, send you to another underwriter, or they'll just take a message for me to get back to you, letting you know when I'd be able to get back to you. So there's always somebody to talk to, and even if it's just a quick question about some sort of potential deal that's sitting on your desk, we always encourage that phone call. Let's have a discussion. Sometimes we can't do it, but we'll recommend maybe go try a place that can do it. So that's why, giving us that quick call, we might be able to lead you in the right direction, even if we can't do it. Last part, the always your client, really, really important to us, that that relationship that you have with your client is maintained. So Logan's going to talk about flips and BRRRR products, and really we strive to have a long-term relationship with those types of borrowers, meaning multiple deals, over a year or multiple years. So they're going to come back to us, and sometimes they just give us a call directly because they know, oh yeah, I just dealt with Logan last time, so I just gave her a call. So as soon as we hear directly from a borrower, we have a very good system in place that we can figure out who referred us them in the first place. We're going to get you back involved and make sure that they're always aligned with you in all deals moving forward. So in Ontario, again, really our focus is on that short-term type of lending, our flip financing, as well as our BRRRR type of deals. Logan's going to go over that in great detail, but just as a highlight, we can do those with as little as $20,000 down. Flip is obviously selling at the end. BRRRR is exactly what that acronym in brackets is saying, where it's buy, renovate, increase the rents, refinance as a holding property, a cash flowing property. Other stuff that we do is bridge loans, where they're buying a new property and they're selling one and they just need that short-term loan, or maybe they're selling a property and they just need the equity out of it quicker than the sale is going to happen. We can take a look at it. So when there's a sale on a property, we usually clump them into the bridge loans, where whatever details there are, we can work around it and make it fit there. Short-term purchases, this one is kind of basically buying a property where you're only going to have it for a short period. You need us for a short term because the other lender can't get it done in time, and you're going to get the refinance done in 3-6 months, whatever it is. Or they're buying a property and they're just going to turn it around and sell it right away. So basically it's something with a defined exit, where either through refinance or through sale, where they fit into these types of loans. So where we lend, we like to stay in more populated areas. So we lend within 25 kilometers of city limits on 100,000 population, 10 kilometers on a 50K population, and then within city limits on a 10K population. There are some exceptions to that. Certain municipalities are not our cup of tea, if you want to call it that. They have some, for whatever reason, we're not quite interested in them. So anyways, that there are some restrictions. Sorry, I'm just reading the chat. It's been difficult to use this product because you don't use future value. My client has been bidding a property. Transfer value is not approved. Not enough value, basically. So I think you're talking about our flip program. I'm not sure what the question Is exactly, yes, flip. Yeah. So we do not lend on prospective value, like we lend on current value, and current value is on today's comps. That's all we can use to determine the value is recent sales. We try to be as current as possible, meaning, sales as, within the last month. Sometimes we have to go a little bit further, and that's okay. We will do a regression or an analysis on what the HPI is doing, and we will do a time adjustment based on that. So that is the best case that we can offer, is by using that as the ARV. Why we have clients put the minimum down payment down is to ensure that they have something in it at the starting point. So we're not going to lend on the after repaired value as well. We're going to lend with that minimum down payment at least, and we charge accordingly to risk. So I think I answered your question with respect to future value. Where we wouldn't do that because in Ontario, last spring what happened, and if we used prospective future values, then we would have even been further off of what we'd use, because in some municipalities, the decrease was upwards of 25% in a 3 to 5 month period. So prospecting is never a good thing as a lender. It's a great thing as an investor, and hopefully it works out for you. I hope that answered your questions. So next details. So we focus on market average single family homes. That's our bread and butter. We know those the best. They move the quickest. For a lot of reasons, that is why we focus there. We do lend to corporate borrowers, but it is always with a personal guarantee. And then on new builds, on all properties for that matter, we do lend on as is value. So, if in that interim purchase type of deal, we are looking at, it's a new build and actually the value's shot up significantly since they got it under contract, we'll look at that as is value and lend on that. Sorry, I see some other questions.
The question was regarding that, Sherwin.
Oh, okay, perfect. So I answered the question. Good, sorry. Yeah, I guess you already did. Okay, so that's that. And then we'll first and second mortgages, but we lend up to 85% loan to value on bridge deals. And again, I'm going to get into more details on that, but that's on an unconditional sale. And then up to 75% loan to value on most other deals. Sorry, Lucy, I just want to be clear. You're saying not a new construction. We will look at new construction on completion of the current value at time of completion. Again, I hope that if you want to just chime in, if you want to go off mute and just ask if I'm missing, feel free to do that. All right, so let's get a little bit more into details of these products. Did I miss a slide? I did miss a slide, sorry. So in the interim purchase, obviously on the left side there, we go over rates, loan to value. So the rates start at 10.49. They are interest only. It's a 6-month fully open term. To pay out without penalty. So really important, obviously, with respect to that it's fully open, so there's no penalty on the end. Fees, there is a 2% fee. The split is 1% between lender and broker. We do charge a $2,000 minimum fee. So, when you're on our side as a lender. So when you're looking at properties that are less than, I guess that's $200,000, that minimum fee it kicks in. Okay. Excellent. So I see Logan's answered that question. Sorry, I'm trying to answer some questions as we're going as well, or making sure they're taken care of. So commitment fee, last point, commitment fee is, on the commitment letter, it's called a commitment fee. It's actually added on to the mortgage. It's not out of pocket when they go to close. So really important. So it's not an extra cost out of pocket. Okay. And then we talked about the as is value, and oops, I did it again, didn't I? I apologize. Now talking about the bridge deals, rates start at 10.99. Again, they're interest only, fully open, and 6 months term. Again, to pay us out. Usually bridges are really short term. Sometimes they're just a week because people have, want some time between, a new property, buying a new property and selling theirs and moving. Sometimes they're a little bit longer because they haven't quite sold their property yet, and so on. So, it's really dependent on the situation. So we will lend, though, up to 85% on unconditionally sold property. Keep in mind that if it's conditional, we would just scale back our loan to value, and then maybe once it became unconditional, then we could increase our loan to value. Or if they haven't sold it yet, but it's listed or that it's going to be listed, we can still look at it in a bridge type of scenario, especially if it's listed, because we know that's the exit strategy. So we can take a look at those types of deals as well. Our loan to value is going to be scaled back if it's not an unconditionally sold property. It's really on a deal by deal basis. It's tough to say what loan to value we would be. Depends on the full package that we see. So we can narrow that down when you gave us a call to discuss the deal. Again, very similar fee structure to the bridge, to the interim purchase type of deals. Submitting a deal for these types of deals, we are on Filogix and we are on Velocity. It's not on here because it's very new to us. So you can submit through those two platforms. Basically, those two platforms, we don't talk back and forth to those two platforms. So all you would do is be submitting your app and your bureau through those, and then the rest of the documents would come via email. So it really is up to you how you want to submit it. We really don't care, but follow your brokerage's rules for your submission. If they require you to go through Filogix or Velocity, do that. We'll pick it up and we'll work with you from there. In interim purchases, we require applications, credit bureaus. We require most recent notice of assessment for clients because of the we just want to make sure taxes aren't owed. Not to say that it's going to kill the deal. We just want disclosure. We want to make sure that there's funds available for the down payment and carrying costs, to ensure that they can basically service the loan until the exit of refi or sell. MLS listing and pictures of purchased property. So oftentimes, in these deals, they're new construction. So you're going to have a purchase contract that'll have drawings, specs, all that. That's really what we need to do our valuation. If this is a if this is an existing property and it's MLS listed, then the MLS listing usually gives us most of our information. But if it's a private sale, we will require pictures of the property to make sure we're getting that valuation correct. Okay. Permission to contact the client. We always do an interview, what we call, it's really an intro call. So that's something that we would be asking for. And then lawyer information. With bridge deals, a few more documents because we're now looking at a sale property. We also want to ensure that it's unconditional. So we want to make sure that both properties, if there's a purchase and a sale, both properties are unconditional. So we're going to ask for those types of documents. Additionally, on the sale property, if you have a first mortgage on it, and we're going to go behind that because there's a bunch of equity there that we can, use to get the deal done. we're just going to look for a statement for the first mortgage first mortgage on that property, and make sure that that it's all, the equity actually truly is there. So that's the end of my part. I'm going to hand it over to Logan. Before I do that, any other questions? Oh yeah, so you guys are asking great questions because it's in our presentation. There's another question. Client contacted you directly for their second property that they want to be funded with this program. Is it still our client? Yes. So that's what I was speaking to Renee earlier. Is we will have you in our system underneath that client. So they call us, we're going to bring them up, and we're going to see instantly that they belong to you. As soon as I get off the phone with them, because I'm gonna talk to them about their new project and see what it is. They might still have a project with us as well, so I might ask them questions about how that one's going, all that stuff. As soon as I get off the phone with them, I'm going to call you. I'm going to get you back involved. Before I get off the phone with them, though, I'm going to let them know that I am calling you and that this needs to come through you. And so we make sure that your clients remain your clients, and that you are part of the fees on every subsequent deal. I will hand this over to Logan now. Yeah.
Hi, everyone. I'm Logan. I've been an underwriter here at Calvert for a few months now. I've been with Calvert for almost 2 years. So just going to talk about our flip BRRRR financing. So kind of this product is unique for us because we can do this with as low as 20K down. That does have our highest interest rate of 17.99%. A lot of people like to choose this product with the low down is because they can keep more money in their pockets to do the renovations and the carrying costs, or if they're a volume client and they like to do multiples at a time, it allows them to be able to do that. And then the more they put down, the lower the interest rate goes. Our lowest interest rate on this financing is 9.99%. If the purchase price is over an 800,000 mortgage, then we would require at least probably 5 to 10% down. So we wouldn't be able to consider that one with our 20K down. These ones are structured as 6-month fully open mortgages. They're interest only and there's no prepayment penalties. That's why a lot of people like these, because flips can often only take 3 or 4 months to renovate and sell. So they can just get in and sell with no payout penalty towards us. Fees on these are 2.2%. We split that, one to us and one to you. We do have a minimum lender fee of $2,000. So, if that purchase price is pretty low and our fee would be less than that $2,000, we would have to charge the $2,000. And then you're more than welcome to match that as well. We do have a rush fee on all of our deals for $1,000 minimum if it needs funding within 72 business hours, just because we kind of have to stop, drop, and get everything going for that specific deal. And then the commitment fee is added to the mortgage. So it's your fee and our fee is included as one fee on the commitment letter, just shown as one. So it's added there. The clients don't have to pay that out of pocket. And then another unique thing is that we lend on the wholesale fee for off-market properties. So, in Ontario, we see a lot of people getting their properties from wholesalers. We just include that assignment fee as part of the purchase price. This is an example of a flip that we did here recently in February. This was done in Ontario with a client of ours. We actually do quite a bit with him. This one, he purchased it for $186,000. He had renovation costs of $5,000, and that was really just to do a quick cleanup, some touch-ups here and there, and some painting. He held this mortgage for about 30 days. The way we structured this down payment was we used another property that he owned that had quite a bit of equity in it. So we were able to do a blanket mortgage across the 2 properties, pull out the equity to equal 25% down payment on this property. And we treat that just as cash. So he was able to get our low rate of 9.99%. Again, he held this for 30 days because this one was a very quick turnaround. He ended up selling it for $500,000, sorry. So he made a net profit of just over $36,000 just by holding this for just about a month. So his commitment fee on this one was $3,720. This is an example of our flip analyzer tool showing that deal that we just saw on the last slide. This tool, we use it on all of our underwriting for our flip BRRRR products. And we send these out to the brokers as well. So you guys are more than welcome to brand this one as your own, send it out to your clients. We are happy to do that. You don't have to send it in for every deal, but we do create one ourselves. So in this scenario, we're kind of looking at boxes E and F. So the number of months to renovate was only a month. He sold it within that same month, so he only had to hold this for a month. His rental budget was just over $5,000. Purchase price was $186. Again, we did that zero down because we were able to pull the equity out of his other property. And then it just kind of breaks down his interest rate, the interest cost per month, what the commitment fee looked like there, and then that ARV that we came to based on what he was doing to the property. This is a continuation of that tool. So just in this slide, we really like to look at box H because we really want to see that profit in the green. So in here, we're seeing a profit of $36,000. Total cash needed. So, you know, when you guys send us in your deals, we'll say, hey, we need to confirm X amount. In this case, it was $12,641. And that's pulling from the down payment, the renovations, and the carrying costs. And then this instance, again, he didn't put any cash towards the down payment as we pulled that from his property. So he really just needed to cover the renovations and the carrying costs of the mortgage. And then the other box we really like to look at is that return on cash invested. What we're looking for there is at least probably a 20% return on cash invested. One of our main underwriting criteria is that our clients are successful and they're taking on profitable projects. We don't want to see them taking on things that are going to be losing money or breaking even, because there might not be a point at that one. And then in box I, this just kind of shows an analysis if you held the mortgage for an additional month, or if you sold it for less than a month, or sorry, held it for under a month, then kind of what that profit would look like there. So this one was really great because he had a 286% on his return on cash invested. So it was a really great project. Documents and how to submit a deal for this one, very similar to all of our other products. We're under Filogix, as Sherwin mentioned, also under Velocity now. You can email everything to us. Documents that we need for something like this: application, credit bureau, notice of assessment. We can work with corporate borrowers. We just require all directors and shareholders of that corporation to personally guarantee the loan. And for the corporation itself, we would need the articles of incorporation, the T2 confirming there's no taxes owing, and most recent year-end financials. Proof of funds, I mentioned that on the last slide. It's for down payment, renovations, carrying costs. This can come from different sources. It can come from bank statements, lines of credits, HELOCs, equity from another property, just like we talked about, joint venture agreements, anything like that. We just need to confirm there's a name on it and a current date just for account ownership purposes. Purchase contract, if it's available. Renovation plan, budget, and timeline. So we really like this to be as detailed as possible, because all of our in-house valuators do desktop appraisals. So we need as many details on the renovations that they're doing to produce an accurate ARV for them. So, you know, what are you doing to the kitchen? Don't just say 20 grand, like how is that getting broken down? What types of countertops are you putting in? Cabinets, things like that. And then a summary of the deal, what the exit plan is. Is it a sale? Is it a refinance? Just things like that. Another thing that we can do is we can personally pre-approve the clients before they find a property or before they put an offer on a property. Our personal pre-approvals are slightly different from what other lenders do in that we're not giving an exact dollar amount to say, hey, go shop for something under this. What we're doing is we're collecting those personal and or corporate documents up front. We're underwriting those: app, credit, NOA, corporate information. If everything looks good, we'll say, hey, yeah, you're personally pre-approved. So now when you have a property in mind, we can take a look at it. We can do the ARV for you prior to you putting prior to your clients putting an offer on the property, or they can even do it without condition of finance. This is really handy too, because it kind of gives them an idea. Okay, is it profitable if I purchase it at this price? What if the seller comes back and wants a higher price? Then is it still profitable? So we can do that ahead of time, and it just really helps their negotiations. Again, as Sherwin touched on, if the full package is submitted, we can have a commitment letter within 24 to 48 hours. Oftentimes we can get those done a lot quicker than that too, but that's just kind of an average that we like to give. And then this slide and the next slide are just examples of the renovation budget and checklist that we've created. We just found this was a really helpful way to get those details that we need from the clients to get that accurate ARV. But again, they can send it in any format as long as it has enough of the details, the budget for each item, things like that, just so we have a proper understanding of what they're going to be doing to the property. But we'll send this to you and you can keep it on hand and send it out to all of your clients. And yeah, so I've kind of, as Sherwin also mentioned, we're all available. There's 5 underwriters. Our underwriting team has quite a few people on it, so you will be able to get a hold of any one of us at any point. Our emails are there. You can reach out to us at any time. I would suggest following us on social media if you haven't yet. We do share a lot of stuff on our social media, Instagram specifically, and we share all of our updates on upcoming webinars and presentations and things like that. Were there any questions from anybody?
Excellent. Well, thanks, Logan, for that. And thank you all again for taking time out of your day to join us. Really appreciate it. Always, again, strongly encourage if you have any questions about it. You have a question. Oh,
you're welcome, Lucy.
You're welcome. So yeah, if you have any questions about a deal, or if you think it might fit or not quite sure, give us a call. We are happy to go through the deal, and usually that's the quickest way to an answer. Or if we're not the solution, we might know where it might work. So so if you give us a call, we can possibly lead you in the right direction. I see fast about the calculator and budget sheet. Yep, we're going to send that out in a follow-up, including a recording of this presentation as well. So yeah, so you'll get that probably within a day or two. All right. Well, thanks again for your time, and have a great afternoon.
Thanks for joining, everybody.
Bye now.